Hey everyone, welcome to another episode of Lender Lounge with Kevin Kim. Today I am honored to have as our esteemed guest the CEO of Renovo Financial and a man with a great name, Kevin Werner. Thank you for joining us all the way from Chicago. Welcome to the podcast.
Awesome. Thank you, Kevin. Great to be here. I love your name.
Great name.
Great. Very smart. Just makes it a smart name.
Exactly. And we both wear glasses too. Very cool. So, we've been following the company's growth and success for years now, and we really got able to get connected through a mutual friend of ours who now works for you, James. And, I've been wanting to have you on the podcast for a long time, and because you guys have a great story.
Thank you.
But you're also in the Midwest, and so it's an interesting story as well. So, first of all, why don't you introduce yourself and the company, and then we'll go from there.
Well, I'm Kevin Werner. I am a co-founder and the CEO of Renovo Financial. Renovo started 10 years ago. This is our 10th year anniversary. And you're right, we're from the Midwest, and we've been growing, this business very slowly out of the Midwest, really to build a solid long-term business. And now we're in 2021, we're expanding pretty aggressively in a lot of major U.S. cities at the moment.
So tell me about the lending business. So you guys have always been in the resi space?
Yeah. So, just to go full. So yeah, Renovo is a private real estate finance company. We lend to single family and multifamily residential real estate investors. And we lend in all types of residential real estate investment projects, meaning whether it's someone who's buying to renovate and sell to a homeowner, or someone that's buying, fixing, and renting, building new construction. Our obsession is to be the best partner for residential real estate investors that there is.
When you guys started back 10 years ago now, first of all, happy anniversary. Yeah. That's amazing. 10 years.
Thanks.
How did things start? Was it just you and your partner and just lending in Illinois, or was it a different business back then?
Yeah, no, it was so I've been in this industry now for 23 years.
Okay.
I'm 43, and so it's been about 20, it's been a long time. And prior to the housing crash of 2007, 8, 9, 10, I was running a family finance company that my dad started, and I was running it with my brother in the real estate lending business, not terribly unlike today's industry. So I had a company then. The housing crash happened. We ended up unfortunately having to shut down that business. And then actually, I never thought I would want to be in the lending business again after going through that horrific housing downturn. I'll be honest, it was bad. I talked to some family friends, and some really close friends encouraged me and said, gosh, you learned so much by going through the housing crash in this industry and losing tens of millions of, going through this just massive bad situation. And doing a great job, by the way. We did an awesome job collecting on our portfolio for our investors and our lenders. So, we learned so much through the housing crash that some family friends said, gosh, you should do it again. You really should do it again. Why would you waste all that education? And I wasn't thinking of it that way. I was thinking of the amount of pain that I went through, and I don't want that much pain again in my life. So maybe I'll go do something else. But the more I thought about it, the more I agreed with him. And I've always loved the lending business. And I love the real estate business. Mm-hmm. And I love real estate. So it was a natural thing, for me to want to kind of get back in the business. And in 2009, it was around Christmas time, I actually bought a notebook and I made a list of all the investors that I knew that could help potentially financially back me to start a new business. Because the one thing I did learn prior to starting Renovo is I really wanted to start Renovo with institutional capital backing day one. A good friend of mine told me, look, if you can't get institutional backing day one, don't do it. And I thought that was a good idea. So put together a business plan, and I made a list of the institutional kind of, private equity firms and asset managers that I knew. And I went and pitched about, I don't remember the number, 20 or 30 of these different groups. And I had breakfast, lunch, and dinner with, I was gaining weight left and right, pitching the idea of starting a new residential real estate finance company. Now, in 2009 and 10, as weird as it sounds, most of them told me real estate's dead and it's never coming back. They were not correct in that.
They're back in now.
Now most of them are, back in. At that time, I ran across a guy that I knew at a private equity firm called Granite Creek Partners. And I ended up pitching them on the idea, and we ended up cutting a deal. And then at the same time, I started working again with one of the guys from my old company, Daniel Rosen. And I said to Daniel, hey, I think I'm going to do this again. We were sitting at a Starbucks on Armitage and Sheffield in Lincoln Park in Chicago. And I said, I think I want to do this again. Do you want to do it together? And I was very lucky. It took him about 10 seconds to say yes. And that was a great decision for both of us to decide, hey, let's do this. That's how we got started. And even though we had institutional backing, we weren't in a hurry to try to go for scale or anything like that. We really, by the way, coming out of the downturn, we were so scared of making mistakes that we walked very slowly, forward. And yes, we only focused on Chicago in the beginning. That was it.
Just Chicago, not even the rest of the state.
No, just Chicago. The Chicagoland area. Yeah. So yes, the suburbs, but I mean, the Chicagoland area has 10 million people in it. Right. So it's enough.
Major
right.
metro.
It's enough. Yeah. Major metro. It's enough to keep you busy. So for the first 5 to 6 years, we just focused on Chicago. We started building our team, building our servicing capabilities. Something we were very obsessed with since day one is customer service. Mm-hmm. And providing a customer experience that was hopefully amazing, right, from beginning to end. So that's why it was important for us to build a servicing arm of the business that we can service our own loans. So right now, Renovo still to this day has always serviced our own loans. And that's been an important element to keep the customer service from beginning to end, so we can provide the borrower with a great experience. And I'll tell you, the reason we got so obsessed with customer service in the beginning is because we had no money to spend on marketing. And if you want to grow, you better do a good job for your customer. Right. So maybe they'll tell 1 or 2 people about you and you can grow. So, we got obsessed about customer service for a lot of, for mostly that reason. And now it's embedded so deep in the company. We're still to this day, a lot of us, we say we're in the customer service business before we say we're in the loan business.
Right. I mean, service goes so far. It's so important. You can't operate. Lending is still service. Your borrowers depend on you for reliable funding. Your borrowers depend on you to be a partner with them, not be that, hard ass, so to speak. Those clients, those lenders, they have to go on volume, and the marketing dollars make up for it, I guess you can call it, right? So let me ask you this though. So you guys concentrated in Chicago for 5 to 6 years. So you opened in 2009. So until 2000, it wasn't until a couple of years ago you guys started to expand then?
Yes.
So
yes.
When was that what was the crystallizing moment for you guys?
Well, we always wanted to grow outside of Chicago, but it wasn't a priority. Right. It wasn't a priority. And we always looked at it and said, I mean, there's enough in Chicago to grow a big business.
And at the time, in that time, I remember the industry back then, there weren't a lot of private lenders in Chicago.
Correct.
So you guys had the market cornered in a lot of ways. You guys currently have the dominant market share in the Midwestern region, I believe. But like, what was it?
Well,
what was that moment that like realized, okay, we got this down pat, and like let's start looking at other avenues? It's different than a lot of folks who started up back then, because we started seeing a preference to go multi-state about 5 years ago. And 5 years ago, you guys are still focusing on Chicago. So what was it?
Yeah. Well, it was the fact that we were building a big enough business just in Chicago that we viewed it as a distraction. If for a long time, I would attend conferences or I would talk to people and they would say the names of national companies. So-and-so is national.
Yeah.
Well, I knew we were doing as much volume as them in one city as they were doing in 10 cities.
Right.
So, we do about $200 million a year in Chicago. And I think that's a good thing. So,
Fantastic.
So what we're looking to do is try to be, we believe in going into a market and going very deep in the market.
Mm-hmm.
We'd rather have hundreds of projects going on in one city,
right,
rather than have them spread all over the place. Now, on one hand, some would make the argument that you're taking too much risk because you've got the Chicago risk. True, but we've got a phenomenal team that's overseeing those assets on a week by week, month by month basis.
Right.
And we can keep our eyes and ears. And what we've built in the cities that we go in is we're trying to build an ecosystem. We're trying to build a network and a system where we know the realtors and the insurance people and even the bankers and our competitors, right? We want to know everybody. And I'll tell you, do you know what net promoter scores are?
Yes, we do it here.
Yeah, so we were big believers in that, early on. So we've embedded it deep into our culture and our process. Mm-hmm. And anytime we fund a loan, we're 50% through the construction or a loan pays off, our system automatically sends our borrower an NPS ask. Like, hey, how are we doing? On a scale from 1 to 10, how would you rate us and can you give us some feedback? And Kevin, what happens is when the borrower responds, the entire staff at Renovo gets that email. The reason I point that out is that embeds great customer service culture.
Oh, yeah.
Because there's nowhere to hide at Renovo with bad service.
Right.
If a customer gave us a bad NPS score, I personally might call that borrower and say, hey, what happened?
Right.
Oh, you were left at the closing for 2 hours and no one told you what was going on, or we charged you a fee we shouldn't have charged you, or this or that. And we do our best to make it right. So when we go into new cities, we're going in with that mentality of how do we build a great relationship with that borrower? And then how do we get to know
that transaction? You're doing it on every single close?
Oh, yeah.
Wow. And the entire organization, so from your staff, your interns, all the way to the CEO, everyone's getting that email. That is impressive. Let me ask you this: so you mentioned how you resolved
with very detailed response. So
borrowers don't pull punches.
Oh no, and often and early on, I'll tell you, I'll never forget. This was like 3 or 4 years ago. It was a Saturday night. I was waiting for my wife to get ready so we can go out to dinner, and I was sitting looking at my phone, and a very bad Net Promoter Score survey came in to the email. And it was a borrower who gave us a very low score, and he said something about the fees. He was very disappointed about how we charged him the fees. So I knew my wife was going to be another 20 minutes. So I literally went I didn't know this borrower. I went into the system on my phone and I called the borrower within 5 minutes of him doing the survey. And he was like, hello. I'm like, hi, this is Kevin from Renovo. I didn't tell him I was the CEO. I'm like, look, I got this email response you just did. I'm very curious. What happened? And he was like, wow, I didn't think you'd call me right now.
Right.
Like, first of all, the guy said, I didn't think anyone would call me, period. The fact that you're calling me now, I said, well, tell me what happened. And he said, you know, when you guys closed my loan, I noticed that you calculated something wrong. And one of the fees, I forgot what it was, but something was calculated incorrectly. And he was overcharged by like $100 or $200. And I said, you know, let me look into this. So on Monday morning, got to the office, grabbed our ops, head and said, can you look into this? Did this, what happened? He's like, oh my God, you know what? The guy's right. We miscalculated that and we overcharged him. So we called him and we found out a good restaurant right by his house, the borrower. So we sent him, first of all, we called him and gave him his money back. We sent him a gift certificate to a restaurant right by his house. And I called him and said, look, I'm really sorry about that. Thanks for pointing that out. And he's like, wow, I can't believe you called me and you took care of it. And he's, I didn't even want the money back. I was just wanted to tell you guys you calculated it wrong. I said, yeah, but that's what we do.
It's unheard of. First of all, in the lending industry, that's fantastic. But I gotta ask, that creates a lot of expectations and from an internally, right? And you guys must, have a very thorough hiring process, because to get talent that's willing to live up to that kind of expectation and perform at that level, right? I mean, how tell me more about your hiring process then to be able to, get entrenched in this type of culture. You guys have a hyper transparent level of accountability and a very high expectation of service. And I commend you for that. And we gotta have the same values here, but it also makes it challenging for us to teach that especially to like seasoned professionals, right? Yeah. And they lateral in. Teaching that type of business practice and business ethics is very hard for us. So,
it is really hard. It is really hard. I mean, a lot of the people at Renovo have been here now for a long time. And we get criticized sometimes for not having, people that have joined with a tremendous amount of outside expertise. Mm-hmm. We didn't get someone with a pedigree from Chase or from this place, big lender. It's too hard to deprogram the bad service and culture that they've infused into those
bad habits. Oh yeah.
So hard to deprogram that. Rather kind of teach someone the loan business who's got a great attitude that wants to learn, wants to give good customer service. I mean, customer service is actually it's almost like in you or it's not, right? I mean, it's almost like a thing that you're either into or you're not. And look, we're not perfect. We make lots of mistakes, and we've hired lots of people that probably get in here and like, wow, these people are nuts. I want to get out of here. They're too obsessed with customer service. But most of us here think it's really fun. And it's now, because of the transparency, you'd be shocked that it's not that big of a deal anymore. It's just what we do, right? And I get very excited right now when I see those net promoter score feedbacks coming in from new cities, right? That we've only been in for 3 months.
I want to ask you that because you entered new cities recently. You started new markets, right?
Yep, lots of them. Yep.
Translating this culture, because it's much easier when you're local. You know everybody, right?
Yep.
How have you translated that to entering new markets? I mean, because you have boots on the ground there, right?
Yep. Really well. So it's working really well. And I get ecstatic when I see a net promoter score feedback come and it's from, Boston, for example, and the borrower is saying, we got one last week saying, wow, where have you guys been? This is the best borrowing experience I've had in 30 years. When I see something like that come over, honestly, I almost start crying. Like I feel like, yes, like we're actually, it's working. Like we're
How do you guys celebrate those wins though? I mean, ask that, because internally, like, a lot of companies have various means to like promote their employees and make them feel appreciated. Do you guys do anything like that internally for those types of wins?
I mean, first of all, because, here's what happens. Because the emails come over and everybody gets them.
Yeah.
There's a frenzy. Wow. Oh my God. I can't believe, there's like this, there's a lot of instant gratification that goes on. Right. I mean, you could be a new team member in New Jersey and their first loan responds to a net promoter score with great feedback, and I'm responding to the whole team within 2 minutes saying, great job, team, that was awesome. So at minimum, that's just built into every day. Beyond that, we do some other stuff. We have a champion. We have the customer service, the world champion of customer service.
I like
belt.
that. Nice.
We have the belt. I should.
Oh, you have a belt. That's fantastic.
Yeah. Hang on. Let me grab it. Hold on. Look at this thing.
Oh my goodness.
Is that real or what? Look at this.
That is awesome.
That's what it's about, right? So this is the hustle.
Great.
You could be the hustle harder champion. That's our motto, hustle harder. So if you're a customer service right now, this was in Daniel's office, but it gets passed around, and this is the customer service championship.
That's awesome. No, that's and it's stuff like that makes. I mean, especially today with today's generation, that instant gratification, but that want to do the right thing for your customer and the incentives that you guys are providing. That's awesome. I still have we've had challenges with this internally. Is that when you have, because we're all remote right now, when we have employees in a different state or a different country, translating that culture over has been a challenge. But I think that the fact that you the CEO are commending them right away, you said with it right. I mean, immediately after you get good feedback, that goes a long way. It's hard to build a culture like that.
Thank you.
That's very cool.
It is something that builds, though. It's like a snowball.
Yeah.
And, once you kind of get it going, and it's, you get, now there's 55 of us or so, let's say, at the company. So, there's a lot of people pushing the customer service snowball forward.
Mm-hmm. Mm-hmm.
Right. And so it gets fun.
That's really cool. And how many states are you guys in now?
About 10.
Fantastic. I mean, you go from almost 10 years, like 8 years in Chicago, and then was it 6 years in Chicago only?
More probably. I mean, it was really 7 or 8.
7 or 8 years just in Chicagoland, and then now just going on to into more markets.
Yeah.
A lot of our clients who are growing, they kind of have a similar story in the sense they blend in their backyard, their county, or their city, and they're starting to expand into different regions. My home state of California, a little bit different. We're oversaturated here, so a lot of lenders immediately go to different states. But clients in other states like Texas, and they want to stay in their backyard, and they're starting to think about expanding. What has been your path to evaluating a new market and things that you can I guess some nuggets of advice you can give some of our listeners when they're looking at new markets.
The way we thought about it, first of all, it all starts with the people. Mm-hmm. So we go to places where we find the right people, the right mm-hmm. talent, that the boots on the ground talent, the local partner that we're going to, have join the Renovo team. So it's a combination of two things. So we've made a list of, call it 15 or 20 markets that we really like, that we think make sense. And it's different for everybody. Not all companies are going to have the same qualifications.
Right.
But we identified, 15 or 20 cities that we really thought we can go and be successful at. Then we start looking for people, and the person is more important than the city. So even if it was number 19 on the list, but we find a great person, mm-hmm. we're going to probably go to that city. And it's even happened recently where we ran across some, a couple of amazing people that were in markets that were not on our list. And we still decided to go to that market based on the people.
So you're not recruiting originators just like as contract, you're bringing them on board as part of the team.
We're opening offices. We're renting off, yes, we're bringing them on full time. Our intention is to build local dominating offices. Like
you're building branches across the country. Yeah. That's a little bit different than most of your competitors. That's interesting.
Yeah.
And is it the customer service priority that motivates that decision?
Well, it's that, and it's also we just believe that real estate is local, and we want to be local. In Chicago we're local, and we want to be local in the other markets we're in. So we believe, like, we don't want someone from, Houston having to call some 800 number, in San Francisco or wherever. We want them to be able to talk to our Houston team.
Right.
And our Houston team knows Houston, right? And our San Antonio team knows San Antonio. And our Dallas
Same
team.
philosophy, though. I'm hearing parallels, right? Because you're taking what you did in Chicago, and you prove the model there, and you're just trying to replicate that at these various locales, right? These various metros.
Yep.
Very cool. Very cool. And it's a very different model, and I commend you for it because it's allowing you guys to grow aggressively. I mean, you guys have grown significantly over the past few years, right?
Yeah. Yes.
So that's fantastic. I mean, so just to give a little bit of color into how you guys are growing, what you're prioritizing right now. I know you guys are focusing on resi right now and trying to grow as deep into these cities as possible. Are you guys now expanding into more of a kind of institutional partner with a lot of local lenders? Or are you keeping it purely retail? So basically, wholesale versus retail. A lot of lenders start getting bigger and bigger, and they start taking a wholesale approach.
It's a great question. That's a great question. We're almost exclusively retail, and we really that is the main business we're in, and we're kind of that's a massive priority. We have set up a TPO group that has a couple of select relationships that are in cities that we're not in. And so that's a way for us to maybe get some exposure to a market that we don't have people, but we like the market, and we find another company that maybe needs capital. We've got enough capital for ourselves and hopefully more. So we're doing a little bit of TPO, but it's not the lion's share. We want to be retail. That's really what we're all about.
So you guys have just celebrated your 10-year anniversary. So looking forward, what's the vision for Renovo looking on? I mean, we're as part of AAPL, we love watching groups grow and enter new markets and start seeing get more involved in the national scene. And so let me know what's the plan, in the next 10 years. The plan
is just to, I just told you the plan. The plan is to keep our heads down and replicate what we think is working for us.
Fantastic.
And that's it.
Not trying to reinvent the wheel.
Our big plan is to hopefully not get distracted.
Yeah, and that's interesting. So, as companies grow and with entrepreneurs at the helm, a lot of times it's very easy to get distracted. Like we're like Anthony and I are kind of the known guys in our office. Like, ooh, shiny, what's that, right? And always dreaming up new ideas. Yeah. How do you and your executive team really make sure you're staying in Chicago for 6 years, 8 years? That's a challenge. I'm sure you guys had a ton of opportunity to jump into, even into just the immediate Midwest. How do you guys stay focused?
It's hard. My team would say the same thing about me. I am a shiny object guy, and I get excited. I'm glass half full every day of the week. So I think anything can work. We should probably give that a try.
Right.
But at the same time, I have been doing this long enough now to know that if you focus, you could win. And to us, winning looks like, really being the number one player in our space in this, specific asset class. That's what we're really focused on. Like, how do we remain very important to our customers, right? We really want to make sure we're very important to our customers and that we add more customers. Nothing else really matters.
And you keep using the word customer. And that's interesting, because I don't hear a lot of people say the word customer when they're dealing with in our industry.
Usually, well, it's true. I'm sorry. I usually say client. I'm sorry.
Client, customer, similar concept. But like I see you see a lot of people use the term borrowers, builders, but the idea of you treating them as a customer. And I'm asking, how much repeat business are you guys getting in like your major markets?
Normally it's very high. We're trying to get an 80+%, repeat ratio at least. But yeah,
that's fantastic. Well, I mean, so because of your background, you guys came out of the recession. You did this before the recession, and you guys have taken a very slow and steady approach to growing. I'm sure you guys are watching markets across the country. You must analyze them thoroughly before you enter them. We're in a really weird time in our industry. We're the pandemic's still going on. There's kind of a recession. There kind of isn't. Real estate, a lot of people say residential still doing well. I kind of want to, ask, let's break out the Kevin Werner crystal ball a little bit. You've had enough experience in the space to kind of give us some insight from your perspective. Where do you think this market's going from an industry standpoint?
I have no idea.
Good answer.
I don't. But here's the way we're thinking about it. So yes, going through the housing crash and being right in the middle of it, made us and made me probably too cautious most of the time. And I would have thought, that coming into 2020, we kind of had a lot of wind at our back,
Mm-hmm.
And I didn't see the pandemic coming. I don't think any of us saw the pandemic coming. So everyone, it's funny. In like 2019, I ran into a guy who I hadn't seen in a while, and he was like, "Oh, I can't believe you're still in this business. That's going to go down. The housing market's going to crash." I was like, "Oh, you're the guy who's going to call it, huh? Like if you're the guy." I gotta get news for you. If you're saying that, by the way, we got clear skies ahead for years. So my point in saying that is everyone was waiting for a housing downturn, and we got a pandemic that gave us a gigantic housing surge.
Right.
So my answer is I have no idea. But what we are focused on and what I'm focused on every day is how do we build a business that is going to be sustainable and going to be around for the cycles. This is a cyclical business. I don't know if you're watching the publicly traded mortgage companies.
Oh, God.
But, if you look at the big ones right now, the big ones, in my opinion, that are really capturing the market right now have been around for 20 or 30 years. So they didn't see a market and hurry up and build a business and try to capitalize on it. Mm-hmm. They said 20 years ago or 30 years ago, hey, we think the mortgage business is a good place to be. We're going to build a mortgage company, and we're going to try to be the best mortgage company we can be. And we're going to try to last a long time. And when times are good, we're going to try to do good. And when times are bad, we're going to try not to die. And that's our philosophy. I mean, literally the same thing. So what we're saying is we are in a bit of a uptick right now, right?
Yeah.
I don't think we're big enough right now to really capture it in the most amazing way possible. But the next one, after this one, I think we will be.
Yeah, I think you guys will be. And that's an interesting way to look at it. Like you're positioning yourself for the next round. Hopefully, we're not in the middle of that transition. I don't think we're facing it anytime soon either, but it's hard to tell,
if you make good loans, like you got to try to make good loans, right?
And you're servicing internally, so you're not at the whim of anyone else. So that's important too.
We're servicing internally. We have most of our loans on our own balance sheet. So we are owning the loan. We own most of the loans that we make. And yeah, we're monitoring, we're monitoring our delinquencies and our foreclosures and anything possible all the time. But I don't know where the industry's going. It seems like there's a lot of capital right now, that's pouring into the space. It's a lot of excitement. We're very excited. We're going to continue to grow, and we're going to push hard to grow. And if we hit turbulence, we're going to triage and do our best to stay alive, during those times.
And let me ask you this: so resiliency, right? So we all got tested last summer, right? Everyone got tested. Resiliency was, a stress test, if you will. What do you think? What are you guys doing to build resiliency? Because it is coming. It's going to have to come eventually, right? And without giving away too many secrets, but like it's cultural and it's business practices, right? So what are you guys doing internally to make sure you guys are prepared for the winter, if you will?
Yeah, I like that. We definitely think that way. Prepare for winter,
especially in Chicago, right?
Especially in Chicago, yeah. Not a couple of things. I mean, right now we are in growth mode, right? So we have pretty much both feet on the gas at the moment. We're spending a lot of time. I mean, we have a robust credit process. I would say it's probably overbearing at times, but we have a very comprehensive credit process that we do. We're monitoring and managing our portfolio, I think, as hands-on as we possibly can. We're always trying to keep our capital relationships, very, very happy and close. I mean, that's the thing that kills these kinds of businesses is when the capital stops flowing.
Right. You guys are making sure you maintain a strong relationship. You're communicating with them frequently. And they're being
doing our best. Yeah. I mean, it's hard. Yeah. We're doing our best to maintain very good relationships with our capital partners, our banks, our private equity partners. So that's critical.
It'll surprise you, right? That was the stress test this past summer for a lot of companies. That they got the rug pulled out from underneath them, right? From a capital standpoint. So,
yeah. The companies the firms that were buying loans that said they would never stop buying loans, stopped buying loans.
Exactly. Well, listen, I mean, there's a lot to talk about, but, one of the things that we really want to talk about in these podcasts is also just kind of like, your growth as a CEO. You've always been the CEO. You were founder of Renovo, and a lot of our clients and a lot of our listeners are trying to grow their businesses and are starting new lending businesses. We're doing more and more new lending business consults every day. Any word of advice for the new CEOs out there, the new lenders out there who are trying to grow and looking at you guys as kind of an example, like, hey, wow, they really did a good job,
Well, thank you for saying that. Well, I would say this. Like, I'll speak. This is just speaking for myself. So, yeah. Number one, this is corny. It's really corny. I think you should love what you do, and if you love it, this is a hard business. I crack up when people are like, I'm going to start your kind of business. I'm like, go for it. Yeah. Go for it. Have at it. Like, it's hard. And unless you love it, you probably are going to want, I want to give up sometimes. And I love this. Like hopefully you can tell, I mean, I really like this. And at 43, I really don't intend to do anything else. Like I've been doing this 20 years. I think I want to do it, forever. So I think, first of all, you have to love what you're doing. And if you don't, honestly, you should just go do something else. Like you should really love it. Number two is, I think, be coachable and seek mentorship from people who have done what you want to do, or at least that's what's worked for me. So I never went to college. I have loved business my whole life. And what I tried to do was say, hey, that's something I want to do. let me go find someone who's done it, and I'll ask them how they did it. And if I can't get a hold of them, I'm going to read their book, right? Or read articles on them. And I would say be curious and be coachable and reach out to people. Reach out to
humility you need there too, right? A lot of, in the finance world, a lot of egotistical types, but what I'm hearing is humility is required to be able to ask, reach out and ask for help.
Look, I know that I know that I don't know a lot more than I know. And I think, there's people out there that know the things that I'm trying to do. So what the hell am I going to waste my time? I got to just find the people that have done recently, and the mentors change over the years.
Right.
You maintain good relationships with these people, but they change. Like a couple of years ago, I went to my private equity partners and I said, guys, I can really use a new mentor right now. I want to find somebody who has built a multi-billion-dollar financial services company. Can you help me find someone who's, do you know anyone who's built a multi-billion-dollar financial service company? Because that's what I want to do now. And, how do I kind of need to meet someone who's done that. And it's funny, they quickly hooked me up with this guy who is the biggest name in Chicago banking pretty much, ever. And he's become a really close mentor of mine. And he's built the biggest banks in Chicago. And his advice is invaluable. Like going to dinner with him. Now I think he's in his maybe late 60s, early 70s. And unless I had done this before, meaning seek mentorship, you might think, well, he doesn't want to. He doesn't want to talk to me. Why would he want to talk to me?
Right. I was going to ask you that. Yeah.
He calls me once a week asking me, how's it going? What's going on? When are we going to breakfast? Hey, can we go to breakfast? Let's go grab dinner. I want to hear what you're doing. He likes, I'm saying this respectfully. I think he likes the relationship as much as I do.
No, that's important.
Because it's a beautiful give and take, right? I'm trying to do what he did. Business is not that different than sports. And at least for me, like I'm not into sports, but to me, business is my sport. And I think of it very competitively. And some of these experienced people, like I'm mentioning, are happy to mentor the next generation. Like if someone genuinely reached out to me on LinkedIn tomorrow and said, hey, Kevin, I'm 32 years old. I'm in Seattle and I'm trying to build a lending company. I found, any chance I can do a call with you? Of course, let's talk tomorrow. Yeah. And if they're genuine and they're serious and humble about it, I'd say, come out to Chicago. Let's go grab dinner. And why not?
Right. And I think a lot of people are scared to ask. They're kind of worried, oh, this guy's not going to, like that kind of mentality. And you'd be surprised what kind of relationships you can build simply by asking and having that humility and actual curiosity. And I think that's also part of it is I've been asked to advise on a lot of projects, and you get two types. You get the type that's actually curious and doesn't know what they don't know and admits it and is willing to learn and ask a ton of questions. And you have a type that kind of, acts like they know everything and cuts corners and, the kind of egotistical type. And I found that the humility and the vulnerability and the willingness to have a mentor, you see long-term success with those folks. And I've seen a lot of lenders grow fantastically and fail fantastically. And the ones that last are the ones that have that kind of mentality. They have the humility, the coachability. So that's great. That's great advice. And actually, the meeting to do that myself is actually, reach out to some of my old mentors and ask for a new mentor, like you mentioned, right? So let me ask you this. So you mentioned some books that you read for people. Are there any good books out there that you're reading right now for people in our space? Anything you're reading that's interesting?
I would say the one that comes to my mind, I forgot the name of it. You probably know a guy, Steve Schwartzman, started Blackstone. So he's got a book called his new book. It came out about a year ago, but I just was reading it the other day. It's awesome. I forgot what it's called, but it's Steve Schwartzman's new book. I mean, there's an example, right? If you want to, why would you, a guy like Steve Schwartzman who built Blackstone from scratch, took the time to write a book to tell the world how he did it. If you're building a financial company and you haven't read the book, what are you doing?
Agreed.
At least that's my perspective, right?
No,
I mean,
that's so. And I tell a lot of fund managers out there, like there's business books, right? And there's learning the financials, but there's also the soft skills that you cannot learn in B school or any kind of totally. Financial course. And that's Baker.
Here's the other thing. Here, I just here's one of the other. You know that guy?
Oh yeah.
Yeah. So I'm a huge Tony Robbins fan. I've been to all of his events. It's been 20 years of going to his events, reading his books, listening to the podcast. I saw this motivational clip today on LinkedIn, so I printed it and just put it up on my wall. But to your point about the soft skills, I mean, there's people skills that you can learn from reading stuff like Tony Robbins and personal development things that it takes a whole person.
Right.
Also, life would suck if you were just successful at business. Meaning, you also got it. A lot of us have a family. I got kids, right? They're all, back there. A wife. I got to be a great husband. I got to be a great father. I've got to be a great business person. So great friend. So those are things that are also important.
And that speaks to the idea of balance, right? And we all struggle with that in our space because we're all workaholics, right?
Especially now.
I mean, we're all working long nights. Have you gotten to a place now where you kind of found that balance?
No.
Good answer.
No, because I had my wife in my ear, right? I had my wife in my ear going, he's got no balance. He's got no balance at all. I think I do. I think I have a little bit of balance, but it goes back to that thing I said earlier. If you love what you do,
it's not work.
To me, it's a very blurred line. Right. where does work and my life start and stop? I have no idea. You and my wife's going to kill me because I'll have her watch this video and she'll hear me say that and she'll go, I know that's how you are. It's, one of my early mentors said that your greatest strength is often your greatest weakness. And that's true for me. It's my greatest strength probably is I love this business, and it's a big weakness because it's hard to do other things sometimes.
Yeah, but it's a nice way to look at your job, though, right? It's not a job. It's your passion, and that's a lot of people aren't lucky enough to say that, and including people in our industry
every day. I feel lucky every day that I was able to find this at an early age and love it and still love it. It's very rare.
Fantastic. Well, I think that's a really good way to close on. And, once again, thank you so much for joining us today, Kevin. You have the best name in the industry, another Kevin. And we really appreciate you guys joining us today. Any closing remarks for our audience? Things to look out for coming from Renovo?
You just got to use Kevin at Drossi and you'll be in good shape. That's what's most important. The key to success is have the right lawyer and the right firm. And that's true, by the way. You guys have really rocked for us since the day we met you. It's been awesome. And
thank you very much.
I'm not the only one. I'm not the only one here who's saying that. It's been really awesome.
Well, thank you so much. We really appreciate that. And it's these types of successes that I'm going to take this clip and, just like you guys do, share it to the whole law firm and show them, hey guys,
let's go.
Good job.
Let's go.
And that belt idea, I may have to copy that. Maybe add a spinner or something like that to it. That is something awesome.
You got to get this. Come on. I mean, it's heavy.
It's a real wrestling belt.
It's a real wrestling belt. I mean, this thing is it's real. It's real. Yeah.
We got to get you on stage wearing that one day.
All right. No problem. No problem. Hopefully
right,
for the Renovo IPO. For the Renovo IPO, I'll wear it.
Ring the bell with it on?
Yes.
Fantastic. All right. Well, Kevin, once again, thank you for joining us today. And all you out there, make sure to like, subscribe, and click the notification bell. This podcast is going to be available. We got another one coming soon. Look out for that. And once again, thank you so much, Kevin. And we look forward to hearing more from Renovo, and we'll see you out there.
Thanks, Kevin.